Let's break down money market accounts, what they are, how they work, and when they might make sense for you. A money market account, or MMA for short, is a type of deposit account offered by both banks and credit unions. And what it does is it combines features of both checking and savings accounts. And here's what makes it pretty unique. So some of the key features for this type of account include higher than average interest rates, being higher than traditional savings accounts. You get limited check writing abilities, debit card access at some institutions, and depending on if it's a bank or credit union, it's insured either way. It's just the insurance is different. FDIC or NCUA insured, just like other deposit accounts. And here's how it works. You deposit your money, and in return, the bank pays you an interest depending on what that money market rate is, usually at a higher rate than that of basic savings accounts. And the rate is tiered, meaning the more money you put into that account, the better your rate could be. So like tier 1, tier 2, tier 3, tier 4. You may get check writing privileges or even a debit card, but these accounts are subject to transactional limits. Historically, Regulation D restricted certain types of withdrawals to 6 per month. And while these rules were lifted and adjusted during the pandemic, many banks still enforce these limits. Now, most money market accounts require higher minimum balances to open and avoid fees, sometimes being as high as $1,000 or more. And what happens if that bank account balance falls below that minimum? You'll just be charged a fee or earn less interest because remember, it's tiered. Now let's talk about some of the pros with this account. You get competitive interest rates. It's more flexible than traditional savings accounts. It's safe and insured. Now some of the cons we got to think about is that you are limited transactions on this type of account. So it's not for writing a ton of bills and using it as your daily spender. Higher minimum balance requirements with this account, so you could be charged fees if you don't keep higher minimum balances, and the rates do fluctuate depending on what the money market rate is. And here's when you should consider using one. So they're great for people who want to park their savings at a safe place and earn pretty decent yields and still have easy access to their funds while earning better interest rates than savings accounts. Also, you get that occasional check writing without the need of a full out checking account. But note this, it's not the same as a money market fund. A money market account is not the same. So money market funds are investment products and are not FDIC insured. MMAs or money market accounts are bank deposit products and are fully insured up to the applicable limits, which I made a full video on that. So if you have cash sitting in a basic savings account earning next to nothing, a money market account might be a smarter move for you to consider. You get safety, liquidity, and potentially better returns. Just be aware of the balance requirements and transaction rules associated with that type of account. Always compare rates and fees before opening one and choose the account that best matches your goals. And if it's all up in the air and you're not sure, just sit down with your banker and ask a ton of questions. Show them my video and then go from there. So here's my video on money markets. Hope you enjoyed it. Hope it provided a ton of value. I'll be back to provide more to the Banking for Beginners playlist, and I'll see you there.